Hello and welcome to this Wednesday's morning market briefing. We've got lots to talk about, but firstly, US off-year election results set to give measure of political mood within the US, and this is going into next year's election year, which is fast approaching. As well as that, UK gilts do rally after a Bank of England official signalled that the Bank of England is open to cutting rates midway through 2024. That's very important news to understanding the Bank of England's monetary policy. We've got lots to talk about on the charts also, with lots happening on the economic calendar, but we'll come to that near the end, so make sure you stay around till you see that. But before we get straight into it, make sure to subscribe. But yes, the first article to talk about is the US off-year election results. Now, yesterday, voters headed to the polls in several states across the US in off-year elections. Now, these elections will be seen as a useful indicator to us, being able to see where the political winds are heading within the US, with recent polls taken obviously hinting to the majority support for Donald Trump as issues for the Biden administration grows over issues such as Gaza, Ukraine, and the economy. Now, this is something we've been covering a lot recently, largely in relation to the fact that although Trump's been dealing with his criminal proceedings recently and his trials in relation to that, Biden has been specifically struggling within the polls as a result of a lack of kind of economic support by most voters. Now, most voters do now believe that they would be better off financially in 2024 with President Donald Trump rather than President Biden. And therefore, we are seeing this kind of shift within the Democrat Party for a possible change within its leadership, with certain Democrat figures seemingly beginning to stray away from Biden as a result of his old age and lack of commanding power, and kind of that lack of rhetoric, which would possibly alleviate some of the people's issues in relation to the economy. It just isn't being seen, and therefore we are seeing Donald Trump rise in the polls, putting him as the front runner, obviously going into the 2024 presidential elections, which obviously have great impacts on policy across the US, of course. Now, contests take place for the governor of Kentucky, which is a Democrat-controlled state for the governor at the moment, as well as the state legislature in Virginia, which is currently Republican-held, and also for Ohio with a ballot initiative, which should act as a litmus test for the abortion issue. So this is a ballot initiative in relation to enshrining abortion into the Constitution of Ohio, because as we know, after Roe versus Wade was overturned, we did see the kind of federal power of abortion rights spread across to different states for them to be able to make decisions themselves on the abortion issue, with some banning abortion, some introducing heartbeat laws, as well as some enshrining it into their constitution. This is what the ballot initiative is really about, and as we know, there's conflicting views on the topic of abortion within the Republican Party especially, and so understanding what the views are within the abortion kind of overall views by the public, and this will be represented through that Ohio ballot initiative. As we know, Nikki Haley and certain other more moderate Republican figures are taking a more moderate stance on abortion, whilst Trump and some more hard right such as Ron DeSantis and some others, and Vivek Ramaswamy, are taking more hardline approaches to the abortion issue. So this will be an interesting one to kind of understand, to help us start to look forward and see how the 2024 presidential election will go, and what policies will be committed to by its kind of candidates. Now, these ballot initiatives and state elections will be essential, however, to the Biden administration's positions and initiatives going into the election year, seemingly which is not favouring the Democrats. So these elections, depending on the results, we will really then be able to see what is the support for the Democrats. Although we've only had polls at the moment, this would provide us some hard proof of what people are willing to vote for in relation to Democrats versus Republicans, and therefore possibly shape how moderate the positions of Biden is going into 2024. Whether he's focusing more on the economy, whether he's focusing more on abortion, and so these kind of topics will be really interesting to note from these elections. Now. With the lack of support driving hand-wringing among Democrats, which are fretting privately on the matter of Biden's age and apparent electoral weakness. So that's the important thing to note. And despite the legal issues at hand for Trump, he is the front runner for 2024 presidential elections, with the primaries beginning in January. And those will be the first primaries, of course, will be the most important to help us kind of picture which Republican presidential candidate has the most support and which Democrat presidential candidate will have the most support. And due to the fact that Biden is running for a second term, it's unlikely that we'll see as much kind of primary action going on there, but it's still certainly something to note as Democrats begin to fret over the matter of Biden's age and apparent electoral weakness. And Trump, as a result of him being the front runner in the polls at the moment, will skip a televised debate with Republican candidates on Wednesday. So that's something to note as well. Trump is currently seeing himself as above those kind of debates and only sees them as a way to kind of bring his electoral standing down. So that's something to note. Of course, keep your eyes on this, as it will be driving policy within the US, and therefore the way people picture the political environment, which will impact markets obviously going into next year, and obviously volatility will have a heavy impact on US indices. So keep your eyes on this. But next to talk about is UK gilts, which have rallied following the Bank of England official did signal, the Bank of England is open to cut rates within 2024. Now, UK gilts rallied sharply on Tuesday following a senior Bank of England policymaker signalled that the Bank of England may be willing to consider interest rate cuts in the middle of next year. Now, the Bank of England really, following the most recent data, the UK is dealing with inflation, arguably the worst out of most neighbouring and similar nations, with inflation rates far above those of the Eurozone. And as a result, the Bank of England had to take a hard line on inflation. That said, many were seeing the level at which, interest rates were sitting as, the peak of the UK's interest rates. And that's despite, earlier predictions being that, rates were going to reach into the 6% territory. So it's interesting to see how this is now shaping up, with the UK already talking about, cutting, interest rates in 2024, despite the high inflation which they're currently dealing with. And this could arguably be as a result of the weak growth within the UK as well, which the Bank of England is having to deal with. And therefore, they're trying to balance that inflation and growth kind of issue. Now, this caused the 2-year yield to fall 0.09% percentage points to 4.62% as a yield, with that being the lowest level since June. And now swap markets are pricing in a 0.75 percentage points cuts for next year, and that's up from 0.5%, which was the prior prediction. So clearly markets are pricing in this quite significantly, with now that significant change from 0.5% in a rate cut to 0.75. So very large changes just based on the rhetoric of Hugh Pill. So that is something that is very important to note, of course. And this fall in the yield is a result of investors moving money from deposits in checking accounts and savings accounts to bonds instead, gilts. And with Pill saying that the Bank of England could be in a position to consider or reassess its stance on interest rates in the middle of next year, depending on changing economic prospects, of course. So this isn't even that dovish, rhetoric, but still it's had such an impact on markets, of course, which is why it's so important to note. And, that said, he made it clear it was unlikely anything was going to happen over the next 9 months, which was going to change economic prospects. Now, this comes as bonds have rallied across the US and Eurozone area with the past week and in the past week, and this is following a string of weaker than expected economic data and lower Bank of England growth forecasts, with industrial production falling for the fourth month in a row in Germany in September and bringing the Q3 output down to 2.1%, adding to the doom and gloom over the EU economy. And this is something we've been talking about a lot recently, is the issues that Germany specifically has been having, which is influencing the Eurozone as a result, with their manufacturing industry struggling as a result of that lack of demand with higher interest rates. And that's why we're now presuming lower levels of interest set by the ECB as a result of this lower level of kind of demand, with the 10-year bond yields falling 0.06 percentage points on Tuesday to 2.68%. And swap markets are now pricing in the first rate cuts for the Fed and ECB in June of 2024, with the Bank of England being priced in August. That said, the Bank of England has stressed it expects rates to stay on hold as it combats inflation, and the inflation outlook is remaining skewed to the upside. So that's something to note as well. But keep your eyes on this. It'll be heavily impacting any UK indices, or most importantly, affecting any British pound pairs. So keep your eyes on this. But moving on from that, of course, we have the charts, where firstly to talk about is US indices. Now, yesterday we spoke about how we were seeing a slight decline from this area of resistance and liquidity on the US 30. That said, going into yesterday, we saw great well, not great, but a certain level of bullish momentum, which has pushed price now above those prior highs, breaking above that and nearing this significant trend line, which has almost been tapped 3 times by price in a bearish fashion. And so breaking above this now would show breaking above 2 significant trend lines, which have shown US indices on the decline, especially for the US 30, and breaking above that will be very significant to determining where US 30 could go on the chart. So definitely keep your eyes on this as the story does develop. But next to talk about is the dollar, and the question is the retracement over, with that bullish momentum that we did see going into this week, following reaching lows off the back of last week's NFP data. That kind of movement to the upside that we've seen as a retracement, it is arguably now over, with that kind of reaction to the downside now taking place, as we do seem to come into contact with the 3820 Fibonacci level, and that's had a significant bearish impact. So it'll be interesting to see now that it's hit this 38.2% Fibonacci area, whether we will now see that sell-off taking price down to that minus 27.2 Fibonacci extension level. So keep your eyes on this as the story does develop as well. Overall, this is heavily being impacted following last week's NFP data, so that's the real thing to look out for. Any changes in the Fed's monetary policy outlook will have a great impact on the dollar, of course. And today we have Jerome Powell's speech, but more on that at the end of the video, so make sure you stay around to see that. Now, Eurozone, following the issues with the dollar, we have seen a kind of push back to the upside on Euro USD, responding to this strong area of liquidity and prior resistance, but now acting as a support, and also bouncing off that 38.2% Fibonacci area. So this is a key area for price, it does seem, with that key reaction taking place from that level. And now we do have the potential to continue a move up this channel, which we've marked out here, which is seemingly forming a bullish movement to the upside after we broke out of this kind of range that was forming, this strong area of resistance. We've broken out of that. So now the question is, how far can we go to the upside, and will we remain within this range? Now we've tapped that 38.2% Fibonacci level. So keep your eyes on that. But next to talk about is pound yen, which saw that great bullish momentum coming off the back of the start of the month, and from there we've continued that bullish push to the upside, breaking above this prior area, this prior trend line which formed this channel, and then acted as somewhat of like a resistance line to price. And now we've broken above that level, seemingly also retested it, as well as retesting that 38.2% Fibonacci area. So that strong kind of bullish momentum that's been created by this significant area could allow price to continue further to the upside. That said, we are in quite overbought territory, so keep your eyes on this, but certainly there is much more bullish potential for the pound, so keep your eyes on that. Next to talk about though is Bitcoin, which although I was kind of providing a pessimistic image to, we seemingly did find some bullish momentum going into yesterday's evening, with a kind of push above this liquidity zone, which I've told many times is a strong area of resistance and has caused price to kind of stagnate and fail to break higher. We've seemingly pushed above it, but now we're kind of returning back below it. We haven't broken above this prior area, so still arguably we are remaining within this issue of high levels of resistance around this area. So really we should wait to see whether we can break out of this overall bullish channel to the upside before we make any claims to where price may be going. Next to talk about though is gold, which has seen a decline going into yesterday and has fallen off and reached this prior area of support and liquidity that we've noted before. It's acted as resistance accumulation over here, but then resistance before, resistance here, and then support here, and now it's seemingly acting as support once again, now acting as a double bottom. We are forming a somewhat range, not really finding any key areas to go to, no momentum to the upside or the downside really on gold since Israel and the Gaza conflict flared up, driving price to the upside and then forming this range as we wait for further escalations in relation to that conflict. That said, we do have Jerome Powell speaking today, so any rhetoric from him which influences the way people perceive the Fed's monetary policy will have a heavy impact on gold, so keep your eyes on that. That's all to talk about on the charts though. Lastly, to talk about, of course, is the economic calendar, where we have quite a bit of data coming up to date. So firstly, we have German inflation rate, so definitely keep your eyes on that as it will be affecting any euro pairs. As well as that, we have French balance of trade, as well as Italian and Eurozone retail sales. Now, we also have the 10-year German bond auction, as well as Spanish consumer confidence. But going into the more important territories in relation to US issues, we do have US mortgage rates coming out today, as well as US wholesale inventories. So that's something to note, of course, with numerous Fed officials speaking today, as well as you can see here and further down below. But most importantly, we do have Jerome Powell's speech. So this is the real thing to look out for and listen in for, as his opinions on US, the US economy and potential US monetary policy will have a heavy impact on gold, not only, but also most importantly on the dollar and any dollar pair. So definitely keep your eyes on that. It'll be influencing US markets today. But I hope you have a great trading day. That's all from us at Wildwood Capital. Have a great one. See you later. Bye.